Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to do a interesting analysis of Tanla Solutions and its numbers. So I'll make you understand how the numbers are going to change in the coming few quarters and what the company does. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about Tanla Solutions. The company was established in 1999 and they provide cloud communication along with messaging and IoT solutions. Along with that, they also provide mobile advertising solutions with their subsidiary that they have acquired just recently, which is Gamoga. They have top clients in the telecom domain, which are Vodafone and Airtel, etc., and have market leadership in its domain as well. A messaging solution is its prime business, but is diversifying into other businesses. So currently, they have acquired companies like Gamoga and Carix, and they are more into towards Internet of Things, towards you can say mobile advertising or mobile domain, in which they look at customer acquisition solutions and how to make more customers through mobile platform, etc. If you look at the numbers of the company, and this is December 20 versus December 19, and the sales is up 91% at 540 crores. A profit of 70 lakh came in, which was compared to a profit of 10 crores. So it looks like a mega profit dip, and you could say that the EPS has taken a battering, but low profits is due to high depreciation, and they had put in a depreciation of around 70 crores. So if you exclude depreciation and other one-offs, the profits would have been around 36 crores for the quarter, and the numbers are improving each quarter over the last 4-5 years. So from FY15 onwards, the numbers have been gradually improving, and over the last 2-3 quarters the numbers have improved many folds. So if you look at the sales numbers, it had been up over 100% in the September quarter, and it's up over 90% this December quarter, and the March quarter numbers seems like going to be even better. If we do a SWOT analysis of Tanla Solutions, then they are the market leader in messaging solutions. And when I talk about messaging solutions, we talk about you can say OTP messages. So whenever you buy something online, whenever you have a transaction through a bank and other things, there's an OTP coming in, and these OTPs go through the route of Tanla Solutions. Majorly, they have virtually a monopoly in this domain, 90 odd percent market share, 80 to 90% market share, and there is where they make the most revenue, or they used to make the most revenue. Now what they have done is they have acquired profitable firms in mobile advertising and cloud, and they have acquired a company called Gamoga, and that is into that platform, and their numbers would be, or its numbers would be priced in completely in this March quarter, and the numbers of Gamoga came into being in the balance sheet and the profit and loss account from October 24th. So the last quarter we saw half of the quarter, or probably two-thirds of the quarter having those numbers, but in the March quarter there will be a thorough numbers of Gamoga as well as Carex. It is completely a debt-free company. That is also a strength, and currently the cash reserves are increasing from 10-20 crores about 4 years back. Currently it is having a complete, you can say, cash reserves of 150 to 200 crores, and promoter is continuously increasing stake, although promoter holding is below 40%, which is less, but they are increasing stake from around 27-28% 4-5 years back to around 34% now. And apart from real promoters having that stake, individual players of the company group and their family members have also acquired stake, 1-2%, half a percent, quarter percent here and there, and that amounts completely to acquisition of over 40-45% stake in the company. It is expanding into current, you can say, technology. So it is not a simple technology company or simple, you can say, IT firm that you rate currently that is going around in the market. It is into a new age technology, and virtually you can compare it to something like an FL in terms of business, the way the business is done, although the scale of the business is lesser than what FL does. And it's on the same lines. And with the acquisition of Gamoga and Carex, we can say that it is perhaps the second company which is listed in that sort of business. It is high sales, and the sales growth has been pretty high, and is continuously increasing dividend payments from around 20 paisa in 2 3 years back in FY17 to now 35 paisa currently. And I believe that in FY21 they would be giving an, you can say, and a dividend of close to 40 paisa or so. So if we do a weaknesses analysis, then I believe that low margins is a problem. So around 6% net profit margin is currently that there is. But with the acquisition of these two companies and the kind of business that they are into, I am sure they are going to have a situation in which the margins is going to improve further. The debt has increased slightly, but still debt is extremely low, and these are only working capital debt which they'll pay back in the short run. Promoter holding is low, as I explained, and that's a weakness. Probably it should increase to 45 to 50%. And probably in some of the businesses, apart from messaging, etc., they are having less competency. But that's why I think they have acquired a company like Gomoga, and also a company like Carex, which has very, you can say, extensive experience of the business itself. The opportunity lies in Internet of Things, mobile advertising, as well as phone messaging, and these are the new age things that is currently being done in the marketplace of information technology, and this is a great opportunity for the future. The business at large in India is at a very nascent stage, and probably over the next 8 to 10 years, it's going to grow even further. The market cap of the company is extremely low at around 7 800 crores, and in that regard, also, if even if it grows 10 times, it will be around 8,000 crores or so, which will be regarded as a small cap even then. The stock is currently trading at, and I'll explain all that. So when I'm talking about the stock is trading at one time, you can say, book value. The book value is around 50 rupees, but it is also trading at very interesting valuations, and these are the valuation analysis that I have done on an Excel, which I'll explain immediately after this presentation. So stay tuned, and you'll understand that how the valuations are extremely cheap in Tanla at the moment. So currently the stock is trading at very attractive valuations, and the market cap is extremely low, as I explained. The threat that lies with the company is heavy competition. So there could be other companies that would be getting into this domain. There could be large cap companies that are into this domain and could gain market share if they do not perform well. That is Tanla. The technology is always dynamic. So over a period of time, you would see that they need to innovate, which they are doing either by acquisition or by doing things at their own end by changing their business model. So these things would help the company grow, but they would have to continue doing that over the next 3 4 5 years, because this type of technology changes every day, every week. Acquisitions may end up going wrong. That is a threat as well. Although these two companies that they have acquired majorly, there are other companies they have acquired, but the two companies I have been talking about, they are pretty well knit and doing pretty well. So there is less chances of that. The market space is extremely volatile, so that has to be taken into consideration as well. There could be change in market dynamics, etc., on the ground level, and telecoms may start their own messaging services. So that is also a concern, that Reliance and other companies may not want to go through the route of Tanla. So that could be another reason or another threat that one needs to consider. So, as I explained, telecom may start with their own operations and their own messaging solution service providers, etc., and they might not go through the route of Tanla, and that would affect their profit. So, that is a threat. Also, there is one problem that took place in 2008-9, and this is the path that Tanla has gone through, and probably this is the one most detrimental effect, and why most of the investors of 10 years back are not willing to get into Tanla again, although the management have changed and there are people from the management of Airtel etc that have come on board, but yet the past always haunts a company. So in 2008 it had Nokia as one of its clients, for whom they were servicing their products, and they it was the largest client, having 70-80% uh, sales share of Tanla, even more than that. And eventually, as we know, that Nokia completely went out of business, and so did Tanla. And eventually, we had a price of 2 rupees on Tanla, 2.5 rupees by 2009. So from those levels, it has come out from the phoenix, and as a phoenix, from the rubble, it has come out. And we are currently seeing that the market cap of the company is 750 crores. But having such a checkered past also have an effect on the kind of you can say PE a market gives a company. So the next thing I want to do is analyzing the valuations part. For that, we need to go to some other links. So let's go to the Excel sheet that I have prepared. So here is the Excel for Tanla Solutions, and if you look at it, there are a lot of numbers and headings out here, and we see right here it is the net profit numbers that are coming in, and you would be surprised to understand that in this column, as you can see, I have written FY20 Q1 net profit numbers, and net profit for Q1 I have written as 36 crores. For Q2 it is 15 crores. For Q3 it is 30 crores, and for Q4 it is 39 crores. Now how come you would say that the net profits are all positive and such healthy numbers, and I am having an FY20 full year net profit number of 120 crores, whereas if we look at the numbers when they got published and the results came out, the results showed that they had a net loss in at least 2 of the 3 quarters that we have seen, and a marginal profit of few lakhs in the third quarter. So how come I have arrived at 120 crores? Let's first understand that, and then I'll come to all the other you can say points that I've written here on the Excel with respect to net profit margins and the full year sales, etc. Whatever columns I have made here, and with the coloring and so on and so forth, I'll explain all the points. But let's first understand how come this net profit number of 120 crores for FY20 has come about. So in that sense, we need to go to the numbers of Tanla Solutions. So if we just go to their result, and here we go. So this is the result, the quarterly result of Tanla Solutions for December 2019, which is the last result they published, and the next results would be out in about 2-3 weeks time. So if you look at the consolidated results for December 2019, we see here the sales number. So the revenue is around 53,903.91. What that suggests, this is in lakhs. So let's say the revenue is around 539 crores, because these numbers are in lakhs. So in crores it would be 539 crores compared to 487 crores in the last quarter, and only 281 crores in December of 2018. So year on year it has been an exceptional growth of over 80-90%, as I mentioned in my presentation as well. And when you add the other income source, then the consolidated, you can say, earnings comes out to be 541 crores. Now the catch here is in the expenses. So cost of services, employee benefits, and I'll talk about it later on. Then there is this column of depreciation and amortization expenses that amounts to 7083 lakh or 70 crores, just above 70 crores, compared to 21 and a half or 21.6 crores in December of 2018. Now these are exceptionally high depreciation numbers, and this is where the problem lies, and this is where the net profit number, the total expenses increases and increases to many folds, and we have expenses greater than the income being at 541 crores and expenses being at 548 crores. So the company goes into losses straight away on the operational front. And if you just edit this 70 crore number and just keep it at 2021 crores, then this net profit number swells up. But why I am saying this? So for that we need to go to the explanation or the notes furnished by Tanla Solutions. And these are the notes furnished by Tanla Solutions. We are concerned with point number 6. So if you look at point number 6 here, it says that as per the Telecom Commercial Communication Customer Preferences Regulation TCCCPR 2018, voice and text communications should be provided using blockchain technology, and this is the blockchain technology that they are using, and this is the internet of things that I was talking about. New technology and cloudification of services has resulted in a need for reassessment of useful life of technology assets, leading to additional provisions of accelerated depreciation amounting to 37.67 crores. This is in lakhs, I am telling you in crores. So 37.67 crores for Q3 FY20 and 219 and a half crores, 219.55 crores for these 9 months which ended in December 2019. So this is what I was talking about. For this quarter, this is an exceptional number of 37.67 crores, which would not come in, say, 1 year down the line. So in that respect, we need to delete or edit this 37.67 crores from 70 crores, and we arrive at uh, a depreciation number of close to 32 crores rather than 70 crores. So there's a clear indication, and if we put these things in, then you would say, and if I go back to the Excel again, then this number of 30 crores feels viable. The tax rate for the company is around 11-12%, is slightly lesser as being an IT and a new age technology company. And so if we take a 10-11% tax rate, the profit before tax came out to be around 32 crores, plus there is additional income, and so 33 crores was profit before tax. And eventually the Q3 numbers, if we take 10% 11% tax, 33 and a half crores as profit before tax. So around 30 crores, round about that, I estimate that the Q3 profit would be if we take out depreciation. Estimating Q4 numbers was difficult, but yet if I consider that a similar pattern continues, and you have Gamoga and Carix as their two main businesses that have come in, and these are very big businesses that they have acquired over the last 6 months, and the full quarter benefit of Gamoga as well as Carix would come in this March quarter, and hence I have put up this Q4 profit number of 39 crores. So overall we are going to end up with something like 120 crores FY20 full year profit. Similar has been the pattern of depreciation for Q2, Q1 and Q3, and that's why we have seen losses, as I explained with the results sheet that I have just put in. So 120 crores is the FY20 full year profit. So after the profit number for FY20, I have considered a 50% growth in profitability for FY21. Why is that? Because of the kind of revenue growth and profit push that the company would have with respect to getting more businesses through Gamoga and Carix apart from their own businesses of telecom. and communications. I'm pretty much confident that with depreciation gone and regular depreciation of 18-20 crores coming in, the net profit number would swell and it would be around 180 crores for sure for FY21. And considering that 180 crores is what I feel they should do a 50% growth. For FY22, I have considered a growth of around 40%, and for FY23, I have considered a growth of 34%. I have deliberately kept it conservative because I think 50% growth rate year on year continuously will not sustain. So I have gone in a conservative manner of checking that growth profitability growth rate to around 30 to 40%, which I consider is not difficult for the company, which is growing its sales considerably over the last 4 5 quarters. So this is about profitability. Let's look at the second here column which I have made, and which is sales. So sales for FY20 Q1 was, and this is consolidated, around 400 crores. For second quarter, it was 489 crores. For third, it was 541. I expect the Q4 sales number to be 561. I have taken into consideration what has been the Q4 sales numbers for last year and how has been the growth comparatively for the Q3 numbers year on year, and all that taken into consideration, I roughly believe that they should come out with sales number of closer to 560 crores. So accumulatively they should do 1900 crores sales and 120 crores net profit. Now just imagine this: 1990 crores sales, and look at the market cap of the company. If I just look at the price of Tanla Solutions. So here is the price of Tanla Solution. It's trading at an upper circuit. It closed on Friday, and I'll give you the reason why it was trading at upper circuit later on. But if you look at the market cap of the company, then here you go. The market cap of the company is around 832 crores, 833 crores. And just look at the projected sales. So the projected sales that I am saying is going to be around 1990 crores. So basically they are trading at around, you can say, only 832 by 1990, trading at only 0.41 times sales. Only 0.41 times sales, as I've just calculated here. And hence I believe it is extremely cheap, because I have looked at other IT companies, and that's where I have come up with this number down here. Market cap, if the stock trades at 2.5 times sales. So if people consider Tanla Solutions as a pure IT company, although it is in the domain of FL India, and it could be taken as a new age information technology company rather than a regular IT company. But even if you take it as a regular IT company, then it should be trading at 2.5 times sales. And if you consider that Tanla Solutions trades at 2.5 times sales, then the current sales numbers of around 1990 should have a market cap number of closer to 5000 crores, 4975 crores. Current market cap is 832 crores. That is way less, and easily, purely on the market cap point of view, it is a 5 6 bagger. But let's not go there, because it the market might not give a sales of, or you can say uh, a number closer to 2.5 times sales. So let's just take a conservative view, and I'll explain that, which is written down here on the Excel sheet. But before that, I want to explain another point here, which is net profit margin, and this is extremely important. But what is net profit margin? So basically it is the net profit divided by, so here is the net profit, which is around 9 crores, divided by the total sales, which is around 399 crores. So the net profit margin here comes out to be uh, somewhere close to, say, the full year margins was around 6.1 percent, but the net profit margin actually came out to be 9%. So actually they were doing, so this is what net profit margin is: 36 crores as the net profit, divided by 400 crores being the sales. So 36 divided by 400, and you will arrive at, if I just uh, do it for you here, you will arrive at around 9%. So 9% is a net profit margin for the quarter. For the year, the net profit margin came out to be around 6.1, 6.2%. And this is the yearly profit that they did compared to the sales that they were doing. So around 6% has been the net profit margin. I believe quarterly speaking, yearly speaking, the net profit margin is going to improve post FY21. FY21 we could see a tepid number because of the Q1 skirmishes that will have. So probably 6.9% would be FY21, 7.5 for 22, and around 7.74, again conservatively 7.74 as the net profit margin for FY23. So a full year sales of 1990 this year, 120 crores as the net profit. And let's go below, and let's understand as to what else I have written here. So uh, let's see that conservatively what could happen, and then I'll take you through the peer comparison and everything else later on. So this is what the conservative numbers look like. So before that, I want to tell you that the current equity base of the company is around 15.25 crores. It was around 14.6 crores before this quarter, but the management has actually bought or has got some of its shares into the market, which were actually preferential shares. They had shares which they got into the market, and they currently hold that share. So those were 62 lakh shares, and if you add that to 14.68, so it is around 15.3 crores shares that are in the market. So that is the equity base. Now here's the best part. They have announced a buyback, and the buyback, we don't know what is the number of the buyback, but what happens through a buyback is that a number of shares goes to the management. The management buys back shares from other players, their retail players, or all the FIIs, DIIs, everything, and they keep it. So again, it, the number of shares in the market, or which is tradable, goes down. So I have an understanding that minimum they should do a buyback of 50 lakh shares. That is the minimum, I believe, around 120 rupees. I don't know the price. Probably the price would be disclosed by 22nd of April. So if they do a buyback of 50 lakh of shares at 120 rupees, then you would have an equity base of 14.8 crore shares, and the EPS numbers completely changes just because of that, because the number of shares that are going to be traded will be less. But considering without these EPS changes, I would say that the EPS for FY20, when I said 120 crores, so if you look at here, 120 crores of net profit, and number of shares that are in the market currently are 15.3 crores. So the EPS comes out to be 7.9. And on an EPS of 7.9, if the stock is trading at 54 rupees, you can very well understand that the stock is less than 7 times earnings currently. And clearly, there are two things I have found out: that normal IT companies trade at 2.5 times earnings, and they trade at 18 times, 2.5 times sales, and they trade at 18 times earnings. So the PE is normally, for a normal IT company not doing a lot of profitability and all, marginal profitability, they trade at 18 times earnings. So considering that you would have an a PE of 18 times, so this is the conservative PE normally for any IT company. And so I consider, although the company is growing at 40-50% on a say on a profit front, yet I'll say that okay, the market gives it a PE of 18 times, then the price comes out to be 142 rupees for FY20 based on FY20 numbers, and currently the price is 54 rupees. So if you look at the price currently, here it is at 54.7 rupees, and you can now understand why I was so bullish on the stock. and I consider that 142 should be the price. Another point that I want to make here is the stock is in upper circuit, and what is the reason behind it? The biggest reason behind it is this buyback news that the company is going to buy back shares. Now I don't know how many they will. On 22nd of April they'll announce, but this is a big thing for a small cap company to announce a buyback. That shows the kind of strength with respect to cash flow that the stock is having. Going forward, suppose that for some reason the buyback doesn't take place, although this buyback figure, if it is only 50 lakh of shares, then there is not much of a difference on the EPS. As you would see, the difference is around 5-6% on the price, etc. Not much, say 3 to 4%. But let's say without the buyback, we will see that the EPS for FY21 would be around 11.8 rupees based on 180 crores of net profit. And on 11.8 rupees, if the PE of the company remains 18 times, which I think it will not, but still, if you consider that the PE remains 18 times, then the price would be around 212 rupees. This is for FY21, so this is 1 year down the line. Now one more thing you need to consider is that at 142 rupees or 212 rupees, the market cap to sales ratio, which I was talking about, that it should be 2.5 times, which is for all the IT companies, or all, you can say, relatively profitable companies normally trade at 2 to 2.5 times. This stock or Tanla Solutions would be trading at only 1.09 times sales, because the sales figure will also improve. And in FY22, sorry, FY21, the sales would be around 2600 crore. I have taken into consideration 30% sales growth, which it has been doing earlier, and currently it is doing 80-90% sales growth. But let's consider they'll do only 30% sales growth, again very conservatively. They'll do 2600 crores of sales, and yet the stock price say is at 212 the rupees. Then the market cap on this target would be 3230 crores. So the market cap of the company would be 3230 crores, that is in FY21. And the again it will be trading at only 1.24 times sales, just 1.24 times sales, and even then the stock price would be 212 rupees. And similarly for FY22, it would be 293 rupees, trading at 1.36 times sales, with an EPS of close to you can say 16.3 rupees. And for FY23, an EPS of 21.9 rupees, at 18 times it would be trading at close to 400 rupees. So this is a conservative estimate of the targets of Tanla Solutions with respect to the kind of profitability that they are doing. Now here's the second bit, apart from what equity, you can say, buyback that they are doing. Now another thing to consider, apart from this price target of 2.5 times, if you think that which company you would consider it to be close to what Tanla is doing, I consider FL India as one of the companies that would be close to what Tanla is doing after the kind of acquisition that they have done with Gamoga and Carex, because Gamoga is a company that currently is close to doing what FL does with respect to mobile advertising. So they are also into mobile acquisition of, you can say, customers through mobile, you can say, tracing, mobile technology, through say questionnaire through mobile, and they are also into mobile advertising. So there are many things that Gamoga does which is similar to what FL does at the moment, and I am taking a conservative estimate of FL at 2300 rupees was trading at 90 times earnings. When it fell and it was trading at 1100 or 1200 rupees just recently, the stock was trading at something like 38 times earnings. So conservative estimate of FL when in a bear market is trading at 37-38 times. If you consider that something like, you can say, uh, if you consider that in times to come, uh, just a second. So if you consider in times to come that something like Tanla trades at those kind of valuations, then Tanla would be at 326 rupees based on current numbers. Why I'm saying this? It would be trading at 2.5 times sales. That is one estimate that we are doing, that it should be trading at 2.5 times sales, and at that point of time it will be trading at 41 times earnings, which would again be not expensive when you consider that the stock is making a profit growth of 35-40%, which it has been doing, and it will continue to do with another two companies joining hands. So basically they are a group of three companies that are producing results from now on. So at 41 times earnings, it will be trading at 326 rupees on current year earnings, that is FY20. It would be looking to trade at 428 rupees and 6,500 market cap. Again, look at this, 6,500 crore market cap with 2600 crores sales. It doesn't sound very expensive, and it will be trading at 36 times earnings. Yes, 36 times is double of the you can say the conservative estimate that I told you, but it would be 50% less than what FL is trading at, and which is reasonable because FL is a much bigger brand compared to Tanla, and I can understand why it is trading at 70-80 times compared to what Tanla is. So if Tanla trades at 36 times, uh, there is a gap between the two, and a reasonable gap between the two. So it should not be considered extremely expensive. So this is the bull case scenario on my behalf, that the stock could go to by in 1 year's time to as high as 428, 430, or minimum it should be trading at around 200, 220 in one year or just over a year's time. If you look at the pair, as I said, something like FL is trading at 39 times EPS, again after falling, 14 times sales, that is again after falling. So 200, I think 200 crores of sales, and trading at something like 1400 crores just recently. A profit CAGR for FL, now this is interesting. For just FL, the profit CAGR is 27% over the last 7-8 years, whereas I am looking at a profit growth of Tanla of around 35-40% easily for the next 3-4 years, and the sales growth of FL India is around 40% over the last 6-7 years. The sales growth for Tanla is minimum 25-30%, going up to even 80-90%. So it fits the bill on all front with respect to these numbers. And even if the buyback doesn't take place, in terms of EPS numbers, I have just mentioned that the stock would be trading at these valuation. So you need to understand that this is a comprehensive analysis of the numbers of Tanla Solutions, and I did this because one needs to understand that they are not making losses on the bottom line. They are making very good profits, and that's why the stock is in my radar all the time, and I have bought into the stock. So that is a standard disclaimer. All right, so one needs to have an understanding first and take their own decisions with respect to buying into the stock. But I consider the stock as one of the best to buy at current levels if you can get into it, and I think 140, 150 is very much possible. So just to wrap things up here, I believe that the FY20 numbers should be close to 120 crores minus depreciation, as I mentioned here. The EPS conservatively, the EPS will be around 7.9 rupees, and conservatively it should be trading at 18 times earnings. If you look at 7.9 times, 7.9 rupees EPS, then it is trading at only about 7 times at the moment, less than 7 times EPS, and it should be trading at 18 times. So 142 is an immediate target that I see in the next 3 to 6 months easily. And over the next 1 year, with an EPS of 11.8 rupees, conservatively I'm looking at 200 220 in the coming months. And if we consider that it should be doing as the peers are, or at least 2.5 times sales, then the price target goes up to around 400 to 420 rupees in a year and a half times. Currently the stock is trading at around 54 rupees. As you have just seen, the stock is on a circuit because the buyback has been announced, and on 22nd of April all the nitty gritties of the buyback will be announced. So I think the stock will remain on circuits for the next 2 3 trading sessions. And going forward, if things are really good, then the sales would be around 4300 crores for FY23. The profit would be well in excess of 300 crores, and you could see minimum 400 rupees on the stock and a maximum of 700 rupees on the stock. This is all my assessment. Again, kindly do your own research and invest into the stock. I'm just giving you an idea what the company can do, and only do your thorough research and take your own decision whether to buy into the stock or not. So this has been my comprehensive assessment of Tanla Solutions. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.